for me, as far as the crypto market goes, I think I really can't be bearish on Bitcoin. I just can't do it. And I have been non-bearish for a long time now because it really is pretty much time. Um, man, it's not looking bad to me. All right, so yeah, we're in a downward sloping channel, but it's very solid. Like we're holding up this high here at 52-ish. We just need to start taking some stabs at the highs again, which we haven't done for a while. That's the only concerning sort of thing, is that we have been playing this range to the downside without even like wicking up on a daily candle or a weekly candle, nothing. So that's a little bit concerning. But other than that, man, I cannot be bearish on Bitcoin. Now, I'll just tell you, yeah, my thought process on crypto is basically about like 6 years ago, I thought that Bitcoin had like two good bull runs in it left, and then it would pretty much be the end of the show for crypto. I don't see it, you know, personally. I just don't see it kind of changing the world or anything. It's kind of useless, but I get most people don't see it that way. Well, most people do see it that way, actually. Most crypto maxis don't see it that way. So yeah, I personally think that we're still gonna have a decent bull run, um, and I really can't be that bearish about it. It hasn't really shown anything to get overly bearish about. Like this level here was really the zone that had to hold, and so far it's done that. So I would say like this whole region here. That's the whole region for me right there. As long as this holds, then I'm pretty bullish on Bitcoin. Um, and what I'd really like to see now is for us to intensely go up for that high there and get over the bloody midpoint of this channel, which we did a couple weeks ago, but then it fell back through and went and tested the bottom of the channel again. So this is like, I just really want to see it pop through that and get up there. Until it does that, I can't really be overly bullish on this. But then we've got this fair value gap here on the daily that it's going to run into. Then you've got the order block right above it. Um, this fair value gap has been hit and pretty deep as well. So it should at least come up into this fair value gap deeper, or higher, not deeper. And as far as the rest of the crypto market goes, like they're just waiting on the biddy, right? As soon as the bull run starts, then everything will start kind of moving up slowly, and then, but I mean, it's not like it used to be. Like last bull run was not the same for the altcoins. Like it was kind of like you had this crazy Bitcoin explosion, and then you had your alt seasons, right? So last bull run was not quite like that. You had Ethereum kind of keeping up with Bitcoin the whole time. You had some other guys like ADA was doing like crazy moonshots while the bull run was on. It didn't really wait. And then when when Bitcoin would kind of relax a little bit and take a little pullback, then the alts would really start pumping. So that was business as usual because those are the maxis, right? They take out their gains on Bitcoin and then slap them into some alts and see if they can catch some rides on that, right? But it wasn't like it was 2 cycles ago. So yeah, man, the whole crypto market is a bit of it's a bit of a weird thing, man. Like you have this weird philosophy of like really straight. Like I don't know, man. I can't even. If I start to go down the rabbit hole of cryptocurrency, it's a bit of a weird rabbit hole for me, which doesn't make sense to me. And I'm not like a Warren Buffett sort of style, but crypto to me is very fun to trade and it's great for making money. But yeah, I don't really see it like outlasting the US dollar, for example. And I think the US dollar is on a decline. So man, I hope that helps. Do you invest or hodl also or just trade in and out? Yeah, I have like a little bit of ADA. I've got some ETH, I've got some Bitcoin. I held Bitcoin for quite a while, but I started selling it and giving it to my nephews. Um, so yeah, I'm not either, Maxi. Only about it for the money. Okay, good man, Bierman. Good man. That's what we all do, I think. But I could be wrong. Like I really don't know. But that's I think one of the greatest things that you can say as a trader is I don't know. I don't. We never know. Crypto Viking, what are you doing? Oh. Um, yeah. So, but I honestly, I think Bitcoin goes up, but that's where I would have to be on that. Uh, yeah. What else do I have? I have XRP, but I've had that for so long. I don't even know how much XRP I have. Uh, and I had some DOT. I got that kicking around somewhere. Don't really remember how much I have of that either, but it's not much. Most of what I have in crypto is in Bitcoin and in ETH. I would really love to see ETH go absolutely bonkers this bull run, but I don't know. I think a lot of it is going to kind of depend now on the situation with the newcomers, which is basically like BlackRock and the monsters that got into Bitcoin. It kind of changes the game. So you're probably going to see it sort of fluctuating like you will the normal markets, right? And they're just going to use it as a bit of a refuge. So you could see some serious volatility in it. Uh, yeah, that's what I have to say about the bit. All right. So, any specific questions? Anything anybody want to go over? Anything anybody wants isn't sure about? Could you do a recap of 1 minute Nasdaq you talked about on Wednesday? You want me to do the recap of Wednesday, or do you want to look at Thursday, Friday? Friday was a nightmare, so I didn't take any trades on Friday. Just wait for an answer here. They're typing. Uh, so, did you take any trades on Friday? Uh,
No, I don't think so. I think we have to get that. Right.
uh, okay, the scalping strategy in the London session. Yep, sure, I can talk about that. Could you also go over what classifies as an order block? I understand the concept, but struggle to mark out order blocks. Thanks. Okay, sure. So we'll do that on the Nasdaq on the 1 minute chart then. Okay, so Yeah, Friday was a nightmare. Look at that. How do you trade that? Pretty brutal. Okay, so we'll check out Thursday, and we'll talk about it. All right. So once again, on Thursday, it's the exact same thing that we talked about, right? You're looking for a stop hunt, right? New York pulls it off, and then remember what I said? It loves doing it twice. So the opening range in New York comes down, comes back up, hits it again, and then in comes the real move. Bounces off the daily open a couple of times, gives you some nice ins on fair value gaps. You could have actually gotten in on this one, was the best one, but either way, we'll talk about that later. Or we won't. So, London session. Okay, so I used to do this with Heiken Ashi candles. All right, so I would highly recommend you actually do this with Heiken Ashi candles because it's going to keep you a bit safe.
Uh, yeah, that maybe I take you wrong, but I think maybe that sculpting strategy was that from 100 line, but maybe I listened wrong. Yeah,
Yeah, no, that's it. The 100 line.
yeah,
Yeah, yeah, that's what we're going to talk about.
yeah,
And we're going to put Sosa's 200 in there too.
yeah. A little tired, so a little slow today. Yeah,
No worries, man. No worries. With the 200 actually adds just more confirmation. So we're going to slap it on, but we're going to look at the Heiken Ashi as well. All right, so there's your Heiken Ashi candles. Here's your normal chart. Okay, so we're going to start off on Thursday because Thursday is a little bit rough to get this going. So, so your London opens and you put in your opening range. All right, you don't really break out of it until here. You get this push down. So what we're really looking for here is the 100 EMA, which is the blue one, and the 200 is white. But the most important one here is the 100 EMA. So when price is below the 100 EMA, you're going to be looking for shorts, and if it's above it, you're going to be looking for longs. However, you do want to be very conscious of the slope of this 200 EMA. All right. So you see here it's sloping downwards, but it's a pretty relaxed slope. Like this is a nice slope down, right? Um, so you're not really looking for much right here. Then you get this deviation out, you push out, and then it slaps back through and down. And then it really pushes away from the 200, sorry, the 100 and the 200 as well. And then you get a nice little cross here. So what I like to do on this is wait for the push away, which will start bending the EMA, right? Get a nice curve on it. Generally, when you're trading EMAs, you don't want to trade them unless they're at like at least like a 4 or 5 o'clock sort of angle on them. You don't want them at 3 o'clock or 3:30. Like 5 o'clock is best. Um, it doesn't always happen, but so we're well below. We've got a good push away. All right. Now we're going to be paying attention to the stochastic just on normal settings. Okay, when the stock gets really low, if you want to, you can look to counter trend trade, right? But I wouldn't recommend that. And then price comes back up and it hits the top of our stochastic, all right? And when I say the top, it's got to be above and the bottom has got to be below 20. All right. So depending how you have your stock set up, make sure you're above 80 and you want it to be nicely above 80. All right. If we, let me just put this on Heikin here. All right, so here's your Heikin chart, looking at the exact same structure here. All right, so we put in our highs here, and then we start putting in these little Heikin candles. So the general strategy is once you hit, and then you start coming back in, and you get a bearish candle, that's when you're going to get into the short. All right, so stock over 80 starts coming back in, you start looking for the short. All right. So when you're using the Heikin candles, what you want to see is just basically your first red candle. All right. And that would be the whole strategy. All right. So your first red candle is at 9:15, which is going to be this doji right here. Okay. So this little doji is the signal candle on the Heikin. All right. Now, I'm not a big fan of this. I wouldn't take this trade because you've got an indecision candle after this uh, pump down here. Then you get a little indecision. So I kind of would like to see a little more. And I would start to look to enter a trade up high. All right. So somewhere in the higher point of this range. All right. So what we could do with that is set up a fib and do a golden pocket and a 0.5. Oops, that's backwards. All right. So you could look to get in on the 0.5 or the golden pocket, and you start to see you're getting nice pushback into the normal zone of the stock. Right, price pushes up, and you could be looking to get in here. You could even take the trade on this candle, honestly, and then you're just going to do a quick scalp. All right, so if it was from here, you would have got 5.25 points and then stopped out. So that would have been a horrible trade. But from here, you're looking at a quick 13 points. So 13 and a quarter. So the way I have my strategy set up for this is I look for 12.5 points profit, and I have a 4 point stop loss. So it's pretty much a 2.5 risk reward ratio. So on the first take profit, you're closing out half of your trade, and then you're going to see what happens after that. So it's already going to be a winner at your first take profit, and then you're going to move your stop loss into profit as well, so make it even more of a winner. But this is a very good day here because it doesn't hit very well. All right, so just so you can see how this, it's not every day. Like things don't always work constantly. But as long as you have a good risk reward ratio and you can hit it enough times throughout the day, which you definitely can on this strategy, it will be profitable. So we come down, finally put in our low, and then price comes back up. Uh, Now you're looking at your Heikin again, but there's a problem because you're now above the 100. All right, so this candle just powers up, rips right above it. So right now you're not really looking for shorts, but if price does dump below it and it's still high enough on the stock, you can definitely get in. All right, this is not getting too complicated here, but it's pretty simple. Um, all right, so we power back into the London opening range. Price starts coming back down, and we get again our oversold stock signal here. But this is a very flat 100. All right, so not the best place to be looking to take a trade. So what we want to do here is kind of just relax and watch a little bit of price development, right? Because it will tell you generally what's going on. So we've got this nice fair value gap here. All right. You always be looking for this stuff. We have pushed out of a zone on a fair value gap candle. All right. So there's some relatively good news here. We put in a low, high, a higher low, a higher high. All right. Price comes back down into the 200 and you are looking at a oversold stock. All right. So let me just mark this range out here. Close this one. And let's take a peek at the old Heiken Ashi now. All right, so this is when reading the Heiken Ashi candles is very important. All right, so oh no, please ask anything else. Okay, so we're going to do a real quick Heiken Ashi lesson here. Okay, when you have a Heiken Ashi candle, right, this is what a good Heiken Ashi candle looks like. It's got no wick on one side, right? So if it's a bullish Heiken Ashi candle, you want to see the body be more than 50% of the total candle. That equals a nice bullish looking candle. And you have to have no wicks at the bottom, all right? When you have wicks at the bottom, it's kind of like a doji. That's the way you kind of think about Heiken Ashis, all right? So Heiken Ashi candles, real nice here. None of them have wicks on the bottom. And then this one has a wick on the top and the bottom. That's just a doji. This one has a wick on the top and the bottom, just a doji, all right? Now, what you really want to see in these situations is you put in this little range here. You're going to have to actually modify this range with the Heiken Ashi, right? So two down, this is your first pullback candle. So this is our defined Heiken Ashi range. And you can get a little bit weird with this stuff, all right? So just try to follow what I'm saying here. And then we can go over this constantly. If you ever want, just ask and I will go over it all the time. All right, so this is a range candle, all right? This is not a range candle because it's down slope. Nope, so we've got three red candles in a row. This one turns into a bit of a doji weird candle, right? So if this was green, this would be called a range candle, a Heiken Ashi range candle, but it's not. This is the first pullback candle. So this is actually the true Heiken Ashi range. And you'd want to see this get broken with a Heiken Ashi candle that closes above it, right? Which is what this one does. Now, once price does this, this is a real Heiken Ashi candle, all right? And it breaks below this. And then you get another Heiken Ashi range candle here. All right, so you can get real specific with this stuff and try to get tighter and tighter and tighter ranges. I personally don't do this. I just leave it at the first one and I take the low and I wait to see how it's going to break out because you really never know if it's going to break down. Like even though the stock is giving us good signals here, we really don't know. So if you see all of a sudden a big Heiken Ashi candle power to the downside, it's a good sign that it's going to continue to the downside. Hope that makes sense. So this candle, well, actually, that is not a Heiken Ashi candle. Right, so I'll just explain why I'm not looking at this stuff. Okay, so Heiken Ashi candle down, and then you get this green candle, which is a range candle. Then you get two reds, but none of them are good Heiken Ashi candles. This one's got a little wick, and this one's got massive wicks. All right. Plus, they don't accomplish anything. They don't push price away from anything. So I'm not really too concerned about these two candles here. Don't make a difference to me. Then we get a weird Heiken Ashi candle here, which looks like the wick is bigger than 50% to me. I could be wrong. 3.75. Yep. So it's a whole point bigger than the body. So that's not a good one. But then this candle breaks out of the range. And in fact, also breaks out of the first range candle. All right, so we're in business here at 10:06. All right, so it doesn't always happen this way, but today price action was pretty perfect. All right, now this is a gift from the trading gods. This one because there's a lot of confirmation here without without needing it, but you've got a shaved top and a shaved bottom with a gap up. All right, so price opens, gaps up, no selling, doesn't even come back to try to fill the gap and just powers up, closes outside of that range with a shaved top. All right, so that is your entry signal right there. Now, this is more complicated than this has to be. So we'll simplify this. But when you're having these weird days like this, where you've got flat EMAs and nothing is kind of playing out the way like normally you're going to see stuff just smoothly moving up and down in London, and it's not really doing that. But this is a like guaranteed entry, all right? And once again, you're looking at 12 and a half points for your first take profit, so right around there. And then your second take profit, I always have at 20 points. All right, so you would have easily hit that. In London, it's not very common to get like 30, 40 point moves. I mean, it does happen, but that's more if they are approaching the Asia highs and then rotating to the downside or sweeping. All right. Okay, so that was that. All right. So the big thing here is the stock and the 100. Okay. So, and I know it doesn't kind of seem that way because we're talking a lot about price action, but I think it's good to talk about this because this will save you sometimes and it will also get you into trades that maybe you're looking to take a scratch on. So price then moves up. We're oversold, starts coming back down. Um, and you can look to counter trade this stuff, right? But this is why I wouldn't do that. And this is why the strategy is better if you don't. So if you are if you're going to start catching a really well sloping EMA, then your second take profit is what you're going to kind of stop just taking, all right, and wait for it to turn back around. And we'll look earlier in the week so you can understand what I'm saying here. But I just want you to understand that this is something that needs to be in play for it to really play out. Because if it's not in play, then you have to kind of watch price action and market structure more. All right. So price then hits our oversold zones here. We're not coming down to the 200. And if we start kind of looking at this, I would take trades here. It doesn't have to hit the 200, but you have to see some sort of sign here, right? So we get a move down. We're now putting in a low, lower high, lower low. All right, we get an inside bar here, which is a bit bizarre. And then we get this nice exact same candle that happened a little while ago that was good for a trade is now not really that good for a trade. All right. So this is good. So here
Yeah,
is a here's a horrible shaved top candle.
yeah.
All right. Shaved bottom, shaved top candle. Why is this not a good candle? It doesn't do anything. So this is our range here. Here's our high and our low. This is just like a internal candle that it's not doing anything. It can't even take the high of this wick up here, which you could kind of consider a mini high here almost. This candle did put in a higher high and a lower low compared to this one, but it doesn't even hit it. So not a great looking candle. And then the next one's even worse. You get a little hangman there, pretty much a hangman. So not a nice looking candle. And then price comes and hits right on the 100. And again, we've got this nice signal on the stock here. And that to me is a trade I would take pretty much every day. The slope isn't bad. Uh, it's a pretty nice looking trade. The only thing that I would love to see on this was that if this candle at least came up and put in like an equal high with this one. But as it happened, you know, definitely I'd be taking that trade and I would be losing on that. Yep, 4.25 points. Not hitting anything there, so there's a loss. Price then dumps below and has an aggressive move away from your EMA again, all right? And then we're oversold. Price comes back into the EMAs. You're oversold on your stock above the 80, well above it. All right, you get a nice bearish engulfing candle. All right, that's your entry right there. Okay, 1 point drawdown, easily hit your take profit one, and you do not hit your take profit two. All right, so after take profit one on these, because this is it's more of a scalping strategy, right? You can definitely use this on a higher time frame and look for day trades or swing trades even, but I use this just for fun during the day. Um, so once you hit your take profit one, then you're going to be aggressive trailing your stop up, right? Like make sure you cash in at least another 5 points on that bad boy. Don't let it come back to your entry, okay? Price then shoots up, shoots back up. We're now back in oversold territory, but we've got some questions here. All right, putting in a fair value gap. Fair value gap gets respected, and the first candle wicks off of the 200 and the 100, and then the next candle breaks it. So there's not really much to be looking at here. The next candle is of interest, but it holds the 100. Next candle holds the 100. Next candle holds the 100. Breaks above. Still in oversold territory. So we could definitely be quite interested in shorting this still, but you want to see some sort of signal from here, right? If let me just erase that. What is that? My Asia open. Hold on a second here. Okay, price breaks below and comes back up. This is a really nice candle, I gotta say, but always when you see these breaks, all right, so this candle is pushing through the EMAs. It doesn't quite take this low here in terms of a close. It wicks it, but it doesn't take it. The next candle comes in for that fair value gap and then turns back around and retests the 200, the 100 and the 200. Now here you're not oversold, right? Sorry, overbought. So you're pretty much right in the middle here. This could go either way, honestly, but then you get a nice bearish candle down. The next one, same thing, and you've got a nice fair value gap left over. So when price comes back into this fair value gap, it's a definite take. All right. So we're just, I make this more complicated than it has to be just to show you that this can still be a useful guide for when you're trading, even if you start incorporating market structure and price action principles, all right? Which is honestly the best thing you can do to yourself. When you take a strategy, I'm going to show you the simplified version of it. But you're going to take losses on every strategy, right? That's just the way it goes. And the more you can read price action, And the more you can glean information from market structure, the better off you're going to be. Okay. This is also one of those trades that I would take, uh, and I would be very quick to be moving my stop loss up. All right. And why? Because we have a low, a high, a lower low, a higher high. All right. This could be just an anomaly. It's also actually, don't get stuck on just one thing. You got a 0.5 there. But yeah, I would really be cautious on this because of market structure. Um, and that's pretty much the whole strategy in a nutshell. I know you're kind of looking for something easier for me to talk about here. But basically, every time you're below it and it's sloping down nicely, price comes up, you take the short. You get your 12 and a half points out, and then you move on. Price comes up, hits, take your position, take your profit. Price moves above, comes back, doesn't quite hit that oversold region that we really like to see. This one does, however, but you're way below the 100, right? But on a big bounce like this, when you power back up above here, you can definitely be looking to get in on a move like this. All right. You can either wait for the retest or you can get aggressive with it and go right back in. And then it kind of starts going to hell in a handbasket after New York opens. So that's what's going on here. That's your crazy New York Open. So forget that. Let us now then check out Wednesday. So this strategy is best on trending days. All right. So how do we know what a trending day is, right? Like this is obviously a trending day. You can definitely use this for during New York, all right? You're just gonna have to mess around with your stop loss a little bit. Uh, what happened to my New York opening range? Just so I know where I am in space and time here. Okay, so in the simplest terms, this is how you would do this, all right? Okay, you get your London Open. Oh, why did I close my stock? Did I close you out? Oh, for God's sakes. Okay, so London opens, pushes up, comes back down. You hit oversold on your stock. Let me just make sure my settings are right there. Yep, they are. All right, so we're below the 20 and we don't hit the 100, right? You don't need to hit it. You just need to get the oversold and then you need to get a bullish candle, all right? So luckily, we've also got our London opening range, so we can feel pretty confident about hopping into a trade here. All right, you get a 1.75 drawdown and you hit 12 points. So this would not hit the 12 and a half point take profit one. All right. Your stop loss would be right around there. So you would definitely be getting stopped out here. Okay. Now, let me just say this. If you're in a trade and you're up 12 points, there's no way that that trade should be a loser. All right. It might not be a winner, but if you're up 12 points, you should definitely be moving that stop loss up to make sure that you're not going to be getting crushed. All right. Price then pulls back, and you get the exact same scenario, still above the 100. We are once again testing the opening range here, and You've got a couple of decent looking candles here. This is a pretty nice candle, all right? The hammer. If you want to get in on that, you definitely can. And this is a very nice candle. Bullish engulfing. Got a little bit of a bigger wick than I'd like on top, but this is where I would definitely be taking the entry. I wouldn't go on that really because it didn't react to an actual low. And what I mean by that is I like to hammer candle at the absolute bottom of a move and like reacting to something. This came down. You see, we got this low here. It's reacting to this low that we've just put in. So I'm not too crazy about it. All right, so you get in on the close of this candle, or maybe you get in on the open there, slow, and you hit 19 points. So second take profit not hit, but your first take profit is. All right, price then comes back, hits it again. Boom, you get another signal. All right, so this candle does not look that good. This candle I like better. And I'm pretty like unless I'm like maniac scalping, I'm pretty conservative with my entries. So you can definitely look to get more aggressive with the stuff like right off of the EMA if you want. But personally, I really like to see reactions of candles. So once again, 17 and a half points, and then price turns around and stops. And then we break under and we start looking for the exact same thing now to the downside. And because we do have this nice aggressive push away from the 100, the slope is already quite decent here. Right. So again, we don't need it to come up and hit. And luckily we've got the 200 here to give us some backup. Price comes up, hits the 80 mark just above it. You get a nice bearish engulfing candle off the 200. Wouldn't have stopped you out because it's a 3-point pullback. And 12 and a quarter points. So we'll see here, 12 and a quarter points. So once again, take profit one is not hit here. So that would be another, not a loser, because honestly, 12 and a half points, you better have that stop loss at like at least 2 points profit. That's the way I pull roll anyways. Then we push up. Over here, we start getting into our oversold territory again knocking on that 200, but there's no real bearish looking candles here. We get a nice push up on a fair value gap. Fair value gap gets respected, but doesn't really do much. Price pulls back down. So now we've got the return of the flat EMA here. So once it's like this, and these guys are, especially when you see this consolidation here, the tightening here of the 200 and the 100, just stay away. Do not trade this. All right. Yeah, it's just not healthy. It's not a healthy choice. So now we start pushing up here. So you can see the slope is kicking back in, and it actually slopes to over the opening range. All right, stock comes back down, way oversold. You get a very nice bullish candle there. All right, so this is going to be stopping you out potentially. And you're not going to hit the 12 and a half pointer there. So don't, just because I'm saying 12 and a half points, right? You want to do take profit 10 points and then your second take profit at 15 points. That would actually be, I would actually recommend that, especially if you're a new trader, because the more you can get out of your trades with good risk reward ratios, and the higher that the higher your win rate will be, right? If you want to close out 10 points on your first take profit and let's say 15 on your second, then you're gonna get more winning trades than losers, right? That's just the way risk reward ratio goes. The higher your risk reward, the less trades you're going to win. That is mathematically just the way trading works, right? So yeah, don't, just because I'm telling you something, don't do exactly what I do. Look at what I tell you, watch it, play with it, and see what you can get out of it. All right. Now, personally, I would have, I, it's hard to really say here. This candle, it's a nice candle, but I'm probably wouldn't have taken that trade because it comes up and then it just takes this wick and then it comes back and closes below it. So it's not a great sign. And then you get this nice pullback here. That might have enticed me a little bit more, but I might not have taken that trade watching price action. Okay, here we're below. We work our way above it, and now our stock is kind of in the midline. A bit sketchy. We get into the fair value gap, come back in, push away, and now we start doing this crazy mess here. This is just kind of ugly as hell. This price action, right? So when you're looking at strategies, always kind of keep this stuff in mind. Like what is going on? We get a push up, and then all of a sudden it just starts putting in this real weird stuff. Like there's nothing going on here, right? And then it's just wicks up and wicks up. But now you've got this little zone here that could act as resistance, right? It keeps now popping up into it and it just keeps pushing it back down. So now you're kind of stuck between a small range, which could potentially be turning into a resistance zone, and your EMAs and your London opening, right? So if we look back here, right, rejected, rejected, rejected. So just kind of weird. Ugly, very ugly. Price then finally pushes up, breaks above it. All right, so it's good news. We've broken out of this ugly little range, but we've now come back and hit the tops of these guys. But we're starting to slope up nice. It's starting to look okay. Price then comes back in, hits it, and again, you get kind of these ugly candles, which they're not really doing much. All right, so aggressive, get right in on the 200 or on the 100, sorry, and check this out. Front test it, see how you can make it work with maybe a smaller take profit. If you're using this on New York, be careful because your stop losses are going to be pretty big. But your general take profit one is going to be like 20 or 25 points, so you'll get a much bigger take profit. But so not much happening here, and then when price finally pushes up away from here, you get this nice shaved top candle here, breaks out of this little small range that we were making, and it's an engulfing shaved top, very nice candle, and that would be your entry signal. So on this one, you eventually do hit your take profit too. All right. Now it's not over because when price comes down here now, you get to your nice oversold signal here. You get this cute little candle here, which is really kind of delightful. This little guy, that little shaved top doesn't do anything, but he's starting to look good. And then you get this monster here, which I would have taken a trade right there, and that would have been a loss, obviously. Pulls back 13 and a quarter points. But losses are part of it, right? You got to take your. And then we come back into the oversold zone, and the cycle begins again. Here is your bullish candle, but now you're coming into that Asia opening range. So this is a good signal, right? But because we know we're entering this zone here, you might want to be a little cautious, right? And instead of just opening there, you might want to wait for a pullback candle or see what's going on. In this case, this would have been a 4.25 point stop loss. That would have stopped me out. But if you wait for the next candle opens, pushes, it gaps up, pushes up, and then pushes back down. And then this next guy pushes out. It's really kind of not great trading, I can say. This is a bit on the wonky side. Bit on the wonky side. And then all hell breaks loose at 1:30. All right, so that's pretty much the gist of how to trade this Wednesday. Uh, all right, so here's your Tuesday London session. All right, so London opens right around here, pushes up, price comes, gives you a little pullback, doesn't quite hit the 80 mark. This guy hits the 80 mark. You get your first real bullish candle, which I would call this one. That one doesn't look too good. This one does. It closes above that. Let me make sure here. 225. Hold on. 58.25. 58.25. Wow, it's equal. All right. So not great, but not great. But I would be getting in on that for sure. So there you go. Take profit one hit. Take profit two would have been hit eventually. All right. Way up there, yep. Okay, price comes back. Hit your oversold here on a real crazy wiki doji. All right, and then you get this nice bullish candle. Doesn't hit take profit one. That is a very, I would be taking that all day long. You're again oversold. You get a dragonfly off of the 100. That would be an automatic loser for me. Yep. There's two losses in a row. But I mean, 9.5 points, I wouldn't have lost any money on that. That's for sure. But and then price crashes below and really aggressively moves away from it. Right? So this is kind of the starting point that you want to see when you're looking to take shorts off of it, right? When price does like this sort of stuff, it comes up, hits it, bounces, comes back above it, comes back below, above. It's not really the kind of stuff you want to be trading, right? You don't want to be looking for this stuff. What you want to see is really clear signals. Like, for example, here, it pushes away nicely, right? And then when it comes back up to the oversold, you're ripping up on huge bullish momentum candles. So you're definitely not going to be shorting that. And so again, here, as it pushes down, it's a great move down. And it's this is what you want to see, right? Aggression. Aggression equals volatility, right? Or volatility aggression. But this is really the kind of stuff you want to see. Once price starts moving, then you really want to get involved, right? So you get a pullback. It hits the 80 here, oversold on the 200, so it doesn't get up to the 100 here. But interestingly, here you start putting in divs here as well. So that's pretty nice. Very nice. Hidden divs. Wow. On the stock. So you hit here, that's your candle. Next candle is a bearish engulfing with a little bit of a gap down. So that's your entry candle. 2-point pullback. You easily hit take profit 1 and 2. Mhm. All right, and then as we're approaching here, like this is just nuts to see. All right, we get oversold here, but there is no trading here. Like there's no bearish candles. This is the only bearish candle we have here. The rest of them are all kind of like not really doing much. That's a pretty decent candle if it had a close down there, but it doesn't. So there's not much here to be looking to trade just yet. And then you get a big push away, fair value gap. Price comes up, comes back, doesn't quite hit oversold, comes back, now hits oversold, but we are below the 200, right? Or the 100, sorry. So you wouldn't be looking for a long here. But if you pay attention to anything we're doing here, you've got a low, a high, a low, higher high, higher low, higher high. This is a low, so you could pretty much pin this in as a swing low, a swing high, and you're looking for this to come back, right? I know it's on a 1 minute chart, so to say swing highs and swing lows confuses people sometimes, but you're definitely looking like things are coming up. You push back down into this really nice fair value gap here, uh, and then price turns around, right? So this is at 1120 here. Price comes back above, comes back, hits the oversold. All right, you get your first bullish engulfing candle here. That's your entry. Somebody gonna ask something? That came so close to hitting the stops, but it doesn't. All right, so stop, take profit 1 and 2 hit. Price comes back, hits oversold. Kind of weird trading there. That candle might have got me excited, but it's very strange. This doji kind of turns me off a little bit, but I'd probably get in there. All right, you get a 3.5 point drawdown and a 16.5 point move up. So take profit 1 hit, get stopped out, take profit 2 not hit. Once again, you come down. This is where the magic 200 saves us. Break back above it on a shaved top, right? That's your entry candle. Ooh, 4.5 point. That would have been a stop for me, but I would have probably gotten back in there. Now, one thing we're not really talking, you'll keep this in mind, that because this is so good on trending days, right? You're not necessarily going to be getting stopped out, and you're not necessarily going to be looking to close your whole trade out, take profit too. Leave some of it open. Slogging around in this range before the old New York Open kicks in. So you can again use this on New York Open expectations. You're gonna have really big stop losses. Like it's, to me, it's not worth it. And then for New York, you're looking for, a safer day trade, right? Don't touch the stuff at 2:30. Leave it all alone. Um, and then hammer the stop hunt trade. Or if it's trending, try to get in on a pullback, right? Is that clear? Any questions? Just waiting for Quest for nothing here. He's typing in a question, then we'll look at some order blocks. And this is where okay. All right, so you're welcome, Quest for nothing. What I would recommend is that, like anything that anybody shows you, never go trading it. This is like trading 101. You have to, you really have to watch this stuff, like kind of play it into the future for a few weeks at least. Check it out. I would recommend a few months and see how it works best for you, in what conditions you like it best, what you want to play in terms of stop losses and take profits, and that sort of thing, right? Okay, Marius. Do you treat the candles in the same way if you're doing other than scalp, or is it only scalps for you? Oh, do you treat the candles in the same way if you are doing other than scalp? You mean like do I look at price action like that? You mean, Marius? Because I'm always looking at the even very rarely. Yeah, same strategy for longer time for term. Yeah, yeah, for sure, for sure. I will. So if I'm doing like long, if I'm looking for a swing trade, even on the things that I take swing trades on, like I I always okay. For example, the here I'm gonna just show you something real quick here. We'll get out of Bitcoin for a second. So this is just the way I do it. I know a lot of people who do not do this. Most people don't do this actually, but okay. So this is like one of my favorite things in the world to trade. All right. This is the BHP group. All right. And you can see that it basically just hits the highs. Yeah. All right. Basically comes into something like this. And then it hits the lows. And it's been doing this since 2000. Sorry, 2020. So it really just kind of is, it just, for years, it's just been stuck in this range, all right? Okay, so I set up my idea on time frame, all right? Price starts moving up here. I'm watching this on the daily chart, and I'm looking at the candles, thinking the exact same thing. Look at that nice bearish hammer candle. It's a bullish hammer, but it's a bearish candle. It's a red candle. That's a dumb place to see that. This is a dumb place to see that. Like, what's with these hammers up at the top of the zone? So you start to think it's turning around, and then you move it down to lower time frames, right? So I would be getting my entries into this on the 5 minute or the 1 minute chart, and I would be doing the exact same thing, reading the candles, uh, looking for a small shift in market structure, wait for an order block or a fair value, and hammer that. All right, so I'm getting my ideas out on the daily or the week, sometimes the 4 hour. But then when I execute, I'm going to be looking for the best possible entry, not a sniper entry, right? I don't care about hitting the absolute high here. I just want to make like a safe move, right? So, for example, right, we've hit into this point 0.5 here. All right, we haven't quite gone to the lows yet, and price starts putting in this W, and looks like it's going to make a bit of a move up, right? We might also be putting in a trend line here. All right, this wacky little channel here. You can see this wacky ass gap down candle here. It's a really weird thing, this asset, but I love trading it. It's really quite simple. Okay, down on the 1 hour chart. All right, we come up, we don't quite hit it. We put in a bearish engulfing. All right, price then gaps, rips it down, leaves this huge fair value gap, and price comes back into it. And imagine where it comes, right? So I know that I want to take a short, but I don't take the short here. I take the short right here, right? And if I can find that on a 1 minute chart where it's happening closer to this zone here, and I get in maybe instead of here, then I do that, right? I hope that makes sense. Do you ever get concerned over the market, like if it's reaching such highs that is potential for bubble crash on a higher time frame, months? Yeah, for sure. Like it's something you have to think about. Now, my problem is that sometimes I think about it too much, and I'll get kind of caught up. Like right now, I'm looking for uh like this week if things start going down, especially on the Nasdaq. I'm going to be keeping shorts open overnight. I will not start closing because this it could really dump, and that might get me in trouble. We might get a major gap up day, and I might be down 2 points. So, yeah, uh, yep. So definitely, if you're looking for long trades, right, you have to understand what's going on in the market. You have to understand whether you're hitting highs or lows, right? Definitely got to keep that stuff in mind, and you need to have a general bias for what you think is going to happen. Um, if you're day trading, that's different, right? Because you can we can look to trade with the trend on a day trade, but you can also counter trade all day long, right? So, like if price is on a let's say we're putting in bullish market structure and we've come off pretty strong lows, right? So you think there's quite a bit of room for it to go up to the top. But the day opens, Asia puts in a big high, or like a big range, sorry. London kind of skirts around the high, but doesn't really take it. And then New York opens close to that Asia high. And you're thinking that we're still in bullish market structure and we're looking up, right? If New York goes up and takes that high and sweeps it, I'm looking for the short. And then if New York goes all the way down to the Asia lows, sweeps those, then I'm closing out my short and I'm looking for a long. Right? Hope that makes sense. Uh, let's see here. You mentioned meditation before day trading a while back. Does that also affect the trading, you think? Yeah, I think it does. Like, I think, yeah, yeah, I think it does. I think it affects everything, actually. Like, I'm pretty hard to offend. I'm hard to rattle. Like, I'm not a, and that's for meditation. Like I've meditated a long time. I started doing martial arts when I was a kid, and started meditating very young. So, like, yeah, you can call me names. You can, you know, I can lose money. It doesn't bother me that much. Yeah, you can punch me in the mouth. I really don't care. I won't really react. I mean, I'll react. I'll let you do it again, but I'll take it personally. You're welcome, Aries. All right. So Evan wants to see order blocks. So we'll do some. We'll talk about order blocks, and then we'll get the. So let's get away from crazy PHP. Anybody who wants to learn how to trade ranges, this is the thing to learn on. BHP. All it does is range, and it will give you the confidence to trade ranging assets. Okay, so order blocks. Again, they come in all time frames, so it doesn't really matter what time frame you're looking at them. And this is one of those crappy things, Evan, unfortunately, that in trading, very few people do dumb concepts the same way. All right. So I will just put out a quick disclaimer here. Order blocks are a bit of a dumb concept. All right. A lot of things in trading are dumb. They just don't make sense. But order blocks work. All right. So uh, now the way I do it, all right, is I will take a fib pull and I call it the box. All right. So, oh, so my settings for my fib pull, not what I want, are these. All right, extend lines right. I've got my 0, my 1, 0.45, and 0.55. And they're all on gray, no colors. And my background is pretty low key, all right? And that's pretty much it. Everything else is turned off, including my trend line. Really don't like to see that. So this is what I use, all right? And the way I mark out order blocks is when you have a move down, all right, or a pivot, I should say, because an order block doesn't have to be at the bottom of the move. This is an order block here, I think. Yes, it is. All right, so a lot of people will mark out the last bear candle before a bullish order block, all right? I really don't do that, but in this case, that's the way it's happening. So I'll show you what I do generally. If the candle is really wicky and it's huge wicks, then sometimes I will not pay attention to this candle at all. And I'll just pay attention to the candle that shoots up, all right? And I've heard a lot of people have called me names for this, but if it's an order block, meaning that price came here and all of a sudden buyers took over, then what you really should be more focused on is where the buying starts, not where the selling starts. Who cares? These were trap shorts, they got wrecked, and now the key is the order block going to hold, right? Okay, in this case it does. All right, let's see if it ever comes back here. No. Probably. All right, so then what you're looking for is again when price comes back into the what's going on. All right, now an order block has to do two things. All right, it has to break structure. Okay, so there has to be some sort of market structure on the other side that it breaks. So here's a relevant high, and this order block creates one, two, three, four candles in a row that just push up until it breaks this. All right. If you had one red candle in here, one pullback candle, then this would not be a valid order block. All right, so it has to continuously move to break structure. It can't have pullbacks in it. And it also has to leave a fair value gap. All right, so in this case, this pullback here that we're looking at into this, you can question whether or not it's the fair value gap or is it the order block. And I would say it doesn't really matter. Who cares? Break structure, leaves a fair value gap. All right, so remember, it has to create something that accomplishes something, right? And then the crazy thing about the order is that they really are the beginning of all of this stuff because you're going to get it creates fair value gaps, all right? And almost always your support and resistance zones are going to be built off of order blocks, all right? And so this is kind of where it gets weird, right? So in the old days, and I shouldn't say in the old days, today, if you talk to old school traders, they will tell you that what I just said is a bunch of weird, dumb shit. And this is not an order block. All right, just so we know what's going on here when we're talking to people. They would say something like this is an order block here. They would say this is an order block. And it's really just a spot on the chart where there's a bunch of sitting orders, and every time price comes into it, it just rips away, rips away, rips away, rips away, rips away, rips away, and finally breaks it. So the old school guys, they look at order blocks as sort of like the first point where you start to create a support or resistance zone, and that's really how they look at it. All right. Now, the way we use order blocks here, it's a little bit differently. So, for example, here's an order block. All right, leaves a fair value gap, breaks this previous high. So I would mark out these two candles here, and I would take the highest point and the lowest point of the two of them. All right, price does not come back here. Oh, oh, just a little touch. The reason I do this is I have found that a lot of times when price comes into the order block, that it will come right into this little zone. You'll be surprised at how often order blocks come right into that little tiny 0.45, 0.55 zone and then turn around from there. We can definitely find an example. That is a massive order block there. Was that the same order block we were just looking at? No. So see, it comes right into that little block and then pushes away, and then it holds and it holds. Pretty weird. Pretty weird. So why is this an order block? Again, got a down candle followed by an up candle, which leaves a fair value gap, and the structure broke this high here, right? And then, there's also breaker blocks, which you have to be aware of. All right, so here we get a push up, then we form this little order block here. All right, so this order block, all right, pushes down, leaves a fair value gap, breaks this low, creates a break of structure, right, to the downside. Price comes up. Look at where it wicks into it. Look at you, right into
Perfect.
that. Perfect, right into that little log. But then it just does a quick rejection and then off it goes. That's still a pretty decent trade, though. Oh, my sweet bucks. Giving the 3.1%. shorts on the biddy. All right, so anyhow, price comes up, rejects, then price aggressively moves away from it. And you would expect that when it comes back in here, that it's going to hold. All right. Like, don't expect it, but it is a very common thing. All right. So, this is what you call a breaker block. All right. Order block here pushes down. When price comes back to it, it should hold. All right. Well, when I say it should, there's a probability, right? There's a chance. So as long as you're watching everything and not just taking trades off every order block you see, although I'm sure you could do all right if you did that. But once price pushes through it, it now has the potential to be a breaker block, right? So it would be break it and then retest it, and then it holds and it pushes up. All right, in this case, it turns into an absolute nightmare and starts building a zone, which again seems to be a sort of a support, support zone. All right. I mean, it just keeps giving and giving and giving and giving. So this is why I like to put out order blocks like this, because once I have this on and price breaks it and then starts holding it, then I just switch this to a support and resistance zone, right? And instead of having to figure out where exactly I'm zone, like what highs and lows am I going to be picking off, I can just slap that on there, uh, put on supply and demand zone, and I know what I'm looking at, right? So remember, your order blocks will generally turn into nothing, but many times they will turn into serious support and resistance zones. Okay, so order block, breaker block, breaker block, breaker block. Do you treat the candle? Hold on a second. Hold on a second. Oh, I'm looking at weird stuff. Okay, so when you mix this stuff all together, what here? All right, I'm gonna do like another 15 minutes maybe here, and then I'm gonna get out of here. All right. So let's take a peek here at the Nasdaq on the 1 minute. Get rid of all of this nonsense. Okay, so when you're charting these things out, right? The key is to either get a good enough understanding of what you're looking at to understand, or to just know what's going on here, right? As opposed to having to mark it all out. Okay, so right here we've got a order block, right? Here's our Asia high. So Asia open, sorry, Asia open starts doing all this weird stuff, uh, and then you get a order block which breaks structure, leaves a couple fair value gaps. You've got one there, you've got one here, and you had a little one there. All right, so mark out this fair value gap. Right, you don't have to, right? That's what I'm trying to say here. You don't, this is all being built up right in front of us here. So we really want to watch this stuff, yeah? So we've got an order block, three fair value gaps. Price pushes away, stops creating any real gaps until this one. All right, so you've effectively pushed away from the high. You've created an order block. It left fair value gaps. You then get a little rangy pullback thing with the fair value gap, gets respected on the way down, right? This guy pulled away, next candle comes into it, pushes away. All right. So what we're effectively doing here is we're just zones, and it's going to be a lot of them, right? So this is going to get real confusing because what we want to do is look to trade off of fair value gaps, order blocks, supply and demand zones, support and resistance, right? So when you've got something like this, it's like, what am I going to do here? What am I going to do here? Do I look for this guy here? All right, we've got the daily open here, we've got the Asia open. All right, I know I marked that out weird, but that's just the way I like to do it. So any more information that you can give yourself to help understand what these structures are going to bring, right? That's what you're going to have to do. So don't get too caught up on fair value gap or order block or any of this stuff, right? Just know that you have to know this stuff inside out, and you have to be able to look at the chart here and know that there's all this stuff there. You don't necessarily have to mark it all out, or your chart is going to get pretty crazy pretty quick, but you really have to know what's going on there, right? So personally, what I like to do is I use fibs like crazy. All right, and my favorite ones are golden pocket 0.5s to trade off of order blocks and fair value gaps. All right, so this order block is very interesting to me. So is this fair value gap. It hasn't been hit yet, right? So I would love to see price come into, especially this one, because this candle really kind of takes over here. This fair value gap, yeah, it pushed down and it kind of gets below this low here, but didn't. It's not much of a low. This one is the one that really sort of gets stuff moving. And you see that the bears really expand out of it, out of the zone with this candle. So this to me is kind of like it's like it's a protection zone. You want to see if the bears are going to actually protect this, right? Or if they're just going to let it get ripped. However, we get this little pullback here into this fair value gap, and price pushes away. So this is already held once, and it's kind of deceiving because it is a bearish candle, but it did push up first into the fair value gap and gone. So this fair value gap has held one time. Price then goes away, and I am really interested in seeing what happens when we come up and hit this little zone here, because we get a little wacky pullback and then price just continues away. So this can almost be a drop, base, drop, supply and demand zone. But what I'm really interested in is the golden pocket and the 0.5. That to me is like golden. So we've got this fair value gap here. Yeah, it's got hit into, but it's creating already a little bit of a story for your back pocket, right? And that's really it. And then price turns around and starts doing the same stuff to the downside, right? Okay, so now we've got a little fair value gap here. Do we need to mark this out? No, because we've got a monster order block here. All right, here's our order block, fair value gap, break structure. So this is a legit order block. Your daily open is right in. That's your Asia open, actually. On the Nasdaq, that's the way I marked it out. All right, just so we're clear. Price pushes away. Fair value gap. All right, price pushes away. Price starts to come back up. What are we looking for here? What do we think is going to hit? All right, we've got the golden pocket in this wacky zone. So it's kind of held on these two candles. Make a little bit of a story for that. The daily open is way up high. So that might not happen. We've got the yeah, we've got the golden pocket and the 0.5. That's what I'd be looking for. So I'd be getting real interested in this fair value here, and not so much into this golden pocket because it's just kind of zone, not much going on. Or if price does come back up into here, you're now going to be looking at this fair value gap in the box. It's definitely got some potential. So I might start looking at my other fib levels here. 786 is just above that. Wow, that'd be pretty interesting. So now I'm just waiting to see what price does here. It comes up, not much of a reaction. I'm too interested in this. Weird gaps here, big gaps down. So that's kind of bizarre. But it's not really giving me much. If this had to come into this fair value, I would have been looking to maybe aggressively short that, but it doesn't. And then as price moves away, it doesn't really create anything for me to watch. So I really wouldn't be looking to do anything. After this trade was in, I would love to look for an add-on here somewhere, but I don't really see it. Nothing there. Big gaps again. Yeah, that's a bit of a weird one there. So all these wicks, so much noise. But that's a nice pivot. It gives a great reaction here. Great reaction. So kind of weird there. But remember, as you're moving away from it, so there's the point 0.5 hit, almost a golden pocket hit, but real massive reaction off at the 0.5 there, and then just starts dumping. So fair value gap, price comes back into it, just back down. Now, when this stuff happens, like you got to be quick, right? Like always be pulling, man. Always be pulling,
Hmm.
right? Because there's the fair value gap. Price comes up, almost hits the 618, doesn't quite. Uh, but again, this candle is not just a fair value gap here. It is a very aggressive candle, right? Now it doesn't accomplish anything, so I'm not a huge fan of it as a fair value gap sort of candle, but it is an insanely big candle for a 1 minute stick here. We'll just go from body to body. You're looking at points. And we're talking about the Asia session, right? Like when you see a big candle like this, usually it's going to push a little bit. So I really like to see it come back into this and just kind of test this candle and see if it's going to give some sort of reaction, right? Which then it does. Again, fair value gap here, order block. Hope this is making sense, Evan. I know it's a bit quick, but so leaves a fair value gap, breaks this low, and leaves another gap here. Price comes back, and this is, I would consider this a fair value gap hit because let me just make sure here, because it's really just coming up to test the high of this fair value gap candle. That's really it. Test it like to the dollar, and then turns around and keeps going. All right, so anytime price is moving away from these order blocks, all right, that is a horrible order block, but it is one. Uh, yeah, horrible order block, and then it actually gives a nice trade too. Look at that. Yeah, very nice. But it is an ugly order block. And why is that an ugly order block? The candles are horrible. You've got basically two doji candles making an order block that's already not very good. And then you've only got one real candle that pushes down and breaks this low here. So it does break structure. It does leave a fair value gap, but it's only two candles, which is not a legit order block. All right. But yeah, got to be aware of all this stuff here. Just constantly be watching it, you know, and yeah, mark it out, make your chart a bloody mess, and then clean it up later on or put them in folders so that you can turn it off. But you'll eventually start to just kind of see it. Like you really don't need to mark. Like you don't need to know that this is a fair value gap hit here. Like just you just see it. It's quite obvious. Now the ones from like an hour ago, 2 hours ago, make sure that you're aware of what's going on. You know, from 2 hours ago, right? And then look at that. That's just like insanity. Asia candle. I think somebody must have tried to assassinate a Chinese warlord or something. Jesus, 72 points in 2 minutes during Asia. That is huge. This stuff is also one of those things. Yeah, you'll hear a lot of traders talk about these moves, and they're always looking to counter trade these moves. And you can make a ton of money doing that.